Well, good morning, everybody. Hope everybody is well this 13th week of our semester. and we're winding the things down. We basically have 3 more weeks of class this week, next week, and the week of May 18th. And every week from now on, we will have graded assignments. We have a quiz this week on chapters 12 and 13. We have a quiz next week wrapping up your portfolio, doing some final work and valuation of your portfolio and your spending diary. And then we have our final examination on Wednesday, May 20th, which we be posted to you, and it'll be due Sunday, May 23rd. Also on May 20th, your writing assignment is due, and you should start putting that together in the next week or so if you've not already done so. So again, the last 3 weeks of our class will have some graded work, a lot of graded work, and just to be aware of that and plan your schedule accordingly as we head into the unknown summer of 2020. Again, quiz this week on chapters 12 and 13, which will be distributed on Wednesday. Quiz next week on your portfolio and your spending diary, which will be distributed on May 13th. And your paper project is due on Wednesday, May 20th. And your final examination will be posted on May 20th, due on May 23rd. If anybody has any issues with their schedules or anything in regards to those future assignments, be sure you let me know in advance. Once the examinations are posted on Sunday the 23rd, your grades will be available by Tuesday, May 26th in Blackboard. And that is if you complete your course evaluations. You will see your grades by Tuesday, May 26th. So that's just something to plan on over the next couple weeks. Also, as we head into the summer, I want you all to remember and know, and we'll talk about this as we move forward towards the end of the class, that as you all are going out into the future and graduating and moving on in your lives, I want you all to remember that you can, I am part of your network, and you can call on me for any questions, recommendations, references, anything you need going forward into the summer and into your future. Please feel free to take advantage of that as we move forward. So that's a recap of where we stand, what we have to do over the next 3 weeks. I apologize for not for canceling class that last Wednesday. I'm sure you weren't too upset about that. But at the same time, I had some family health issues that we took care of, and everything is back okay. So our topic this week is perhaps one of the investment vehicles or personal finance vehicles that you probably will all be using more than any other type of investment vehicle, and it's called a mutual fund. A mutual fund is a place where you can invest a fairly small amount of money into a wide variety of different types of investments, where if you would try to invest in those individually, it would be a whole different story. And I gave a definition of that in our introduction video yesterday, a nice definition of mutual funds. That video is also in our YouTube playlist and can serve as a nice background to mutual funds. But if I was an individual investor and I wanted to invest in the stock market, or if I wanted to invest in the bond market, if I want to invest in real estate investment trusts, or if I want to invest in any other type of major investment, gold, commodities, futures, options, it takes an awful lot of money to be successful. At least over $1,000, and probably a lot more into $5,000 to $10,000 range. A lot of stockbrokers say you're not going to get too much return on your money if you invest anything less than $10,000 individually. So how do you get around that when you're just trying to get into the market? Well, mutual funds. You invest in mutual funds because mutual funds give you the ability to invest in areas where you cannot because of the limit of the size of the investment. So one of the interesting things about that is mutual fund gives you the ability to invest, gives you the ability to invest in other places besides one big chunk of money. There's many advantages and disadvantages to mutual funds, and we're going to talk about that. We're also going to look at online brokerage accounts today and on Wednesday. This is going to be our look into how you would do this online. We're also going to take a look at why do we want to get into mutual funds? What's the big deal? Well, the mutual funds is your entry into investing. It's one of the entries into investing. The advantages are diversification. You get into a mutual fund for $1,000, you can own up to 100 different stocks. Because what's a mutual fund? It's a pooling of resources of many investors to get investment in different types of investments. It's diversification. If I wanted to diversify individually, I'd need about $50,000. But with $1,000, even $500, I can get into a diversified portfolio and invest. Also, you don't have to, you pay part of that into professional management. You have professional managers managing your $500 or $1,000. That can be an advantage, having somebody who knows what's going on in the market. The liquidity and the ease of buying and selling is very easy in mutual funds. You throw $500 into a mutual fund, and the management of the firm allocates that out to how they feel the investment portfolio should be, and they buy and sell the stock. You don't have to do anything like that. Now, granted, you have to pay a fee, but that fee is minimal, especially if you're in a huge or a large mutual fund. You have multiple withdrawal options. You can move money around very quickly. A lot of us invest in IRAs, and we've talked about that in the past. IRAs can be moved around very easily in and out of mutual funds. The distribution of reinvestment of dividends and capital gains. Every month, you get a statement. The statement tells you what was the income you earned, dividends off the portfolio, and were there any capital gains? Did the management of the mutual fund buy or sell any of those funds, and did you receive a gain or a loss? Switching privilege within the same fund family. So if I go into Fidelity, which is a huge mutual fund investment house, Fidelity has all different sorts of mutual funds, growth funds, new income funds, treasury stock, treasury bonds, in real estate, all different types of funds, gold funds, commodity funds. You can switch these around very easily within the mutual fund family, like Fidelity. Services, you get a lot of services, toll-free numbers, you get a nice statement recording all your transactions, you can move the money into your savings and checking account very easily. A lot of people invest in a mutual fund and then they have the money moved out every now and then into their accounts where they can use it. It's very easy. Mutual funds are easy. But at the same time, there's also disadvantages. And those disadvantages can because of the nature of the investment. You're investing with a group of people. You're not investing individually. So you are at the whim of the professional managers or at the purpose of the fund. All right. When you take money out of a mutual fund, you naturally have to pay withdrawal costs. Why? Because the managers of the fund anticipate you're going to keep the money in there for quite a while as a long-term investment. And so they make investments to satisfy that long-term requirement. What do I mean by a long-term requirement? Usually investing managers invest mutual funds in a period over 3 to 7 years. So if all of a sudden you put money in a mutual fund and after 6 months you pull it out, that's kind of getting away from their plan of how to manage that money. They're going to nail you for withdrawal costs. Also, there's management fees. A certain percent every month is allocated as a fee. Also, mutual funds tend to sometimes not match the market. They're a little bit under. Why do they not match the market? Because of those fees, but also because they have such a large group of investors with such a broad stream of expectations. They're very conservative. Mutual funds tend to be very conservative. Yes, you can buy very aggressive mutual funds. Fidelity has a growth and aggressive stock fund, which invests in companies you never even heard of. But usually mutual funds are a little bit behind the market, a little bit behind because of the nature of the fund. They have to satisfy the expectations of a wide variety of investors. You have the inability to control when you make money or not. That sounds kind of funny, but there you're at the whim of the investment managers buying and selling the shares of your holdings. You do not have any control. You can't call up a manager at Fidelity Growth Fund and say, hey, I don't like Apple, sell it. They'll tell you to go to hell. Because the reason why that is you're part of an overall group of investors. You lose control of the ability to make buy or sell decisions. Now, you can make buy and sell decisions by moving your money from one fund to another that fits your investment scheme, but you have no control in the buying and selling of those mutual funds. The potential market risk associated with those investments is like any other stock. That's not really a disadvantage. You're at market risk, like what happened 6-7 weeks ago when the market went south because of the pandemic. Everybody went south. You're at the mercy of the market, and somehow that will be affected. And also, here's one that a lot of people don't know about, and this is one of my strongest disadvantages. It's just like when you sign up in the internet and you allow somebody to take your email address or your internet postcard. You are now at the whim of spam. You are now at the whim of trashy correspondence, phone calls, whatever. Your name usually, when it's associated in a mutual fund, gets passed on to a lot of people. It's passed on. Now you can limit this and you can tell them, no, nada. But even within the mutual fund organization, you're going to get aggressively monitored and managed about future investments. Always the sales pitch will be on you. When you're in a brokerage firm and you have individual control of your holdings, you can just tell the brokerage firm, stay away from me. I'll tell you when you talk to me, leave me alone. With mutual funds, you don't have that advantage. You're at the mercy of aggressive sales tactics. It's just like when you sign on to an insurance company. Next thing you know, every 2 weeks, you get a phone call from an insurance broker asking, oh, do you want to reassess your holdings? You want to get some more insurance? Oh, we have these plans now. Why don't you take advantage of it? That's one of the dark sides of investing in mutual funds. You're on everybody's mailing list. You're on everybody's email list. People now know that you're an investor, and you'll get flooded with requests for investments from even other different companies. You have to watch out for that, especially these days with everything going online. You're at the mercy of your name, or your investment desires will be sold to other people. So you got to watch out for that. So if you go in with eyes wide open, investing in mutual funds, looking at the advantages, you're diversifying, you don't have to worry about anything. Somebody else is doing all the lifting. The disadvantages are the cost, the withdrawals. You're not going to be making as much money as you think you're going to be making because of the nature of the investments. So that's something to think about as you go forward in understanding mutual funds. Now, how do you get into mutual funds? Well, you can get in mutual funds very easily. You can invest in mutual funds in regards to your bank. You can invest in mutual funds through various operatives like Charles Schwab, Ameritrade, E-Trade. You can invest in mutual funds through your credit union. In some credit unions, you can invest in mutual funds with investment clubs. One of the first things I did when I was starting investment when I got out of college is I went with a couple of homeboys and we created an investment club. Julian, could you turn off your microphone? Thank you. You go with a variety of different investment clubs. And in these investment clubs, you pool your money and invest. That's one of the first ways I got into investing, is I invested with my homeboys. And we put together investment portfolios, and we at first invested in mutual funds. That's an interesting way of getting started. But there's a variety of different ways you can do that. And one of these different ways is I want to highlight right here. Just a sec. Online trading. There's very many different types of online trading accounts, and we're going to look at more specifics of this on Wednesday. But one of the key things about online investing is you can, for a reasonable low amount of money, invest in different types of funds and mutual funds. E-Trade, Ameritrade, Charles Schwab are the three biggest investment online trading firms. They all are about the same. They all offer slick advertising, slick services, fairly reasonable cost, and a wide menu of different alternatives. Investing in IRAs, investing in mutual funds. They even get as sophisticated as doing options and futures trading. But online investing is tempting for us, but you got to watch yourself here, because they want your money as much as possible. They have requirements for deposits. They have requirements for fees. And you have to make sure you're getting an actual return out of this investment when you invest it. Let's take a look at the sales pitch for E-Trade. Let's take a look at that.
Good news, investing at E-Trade, not complicated, but you will need the internet and a computer or a phone or a tablet and a few dollars to get invested. Kidding, you don't need much to get invested. To start, ask yourself a very important question. Do you want to invest in a regular brokerage account or a retirement account? A brokerage account is where you invest and you still have access to that cash. Or maybe you want a retirement account, which comes with tax advantages. But you could lose those advantages if you take that money out without meeting certain requirements. So you may want to consider this account type if you are looking long-term or looking for a home for your old 401k. Long-term! If you need any more information to help you choose or you need help with anything else, just call this number and E-Trade will help you. You remember real people? E-Trade has them. Second question, what do you want to invest in to start? Look, I know it may seem overwhelming, but E-Trade makes it simple. If you're new to this, you might consider investing in an exchange-traded fund, an ETF, or a mutual fund, which offers broad market exposure. Don't worry about the jargon. To put it simply, when you invest in an ETF, you're investing in a basket of stocks and/or bonds that can be bought and sold throughout the trading day, just like stocks. Similarly, a mutual fund is a basket of investments that's managed by professionals. But let's say you want to invest in a single company. E-Trade has information and research that's easy to understand. So let's say you want to buy shares in Purple Car Company. Oh, right, a disclaimer. Notice it has a ticker symbol, PCC. By the way, so do mutual funds and ETFs. Here you can find news, information, and third-party research about the company. To invest, just put in how many shares you want or how much you want to spend, click buy, confirm, and boom, you are an investor. Now, if doing a bunch of stock research is not your bag, you can learn about and invest in themes. That's right, themes like clean water, clean energy, gender diversity, AI. Just kidding. Basically, if there's an industry that you're interested in or if there's an ethical industry that you want to support, you can invest in it. So there you go. Could investing get any easier? Yes. Yes, it can. Let me tell you about Core Portfolios.
Core Portfolios.
This portfolio is part of E-Trade Personalized Investments, which offers you professional management of your portfolio. In a nutshell, you answer questions about when you plan to use your money and how much risk you're willing to take. Then E-Trade recommends a professionally managed portfolio that's tailored to your needs. Then their advanced tech monitors your portfolio and makes adjustments when necessary to keep you on track. The app, voted best mobile trading app by stockbrokers.com. You can trade, do research, view your portfolio's performance, transfer funds to and from your bank.
Stock market and stock alerts, view news on your stocks, compare your performance to the market, pay bills.
You get it. Full control from anywhere your phone works, or your tablet, or your phone that's as big as a tablet. I thought technology was supposed to make things smaller. I have no pocket this size. Good luck out there. I hope to make more useful videos like this, so look out for them. My name is Alex. Bye now.
Pretty slick, huh? Very slick. They want your money and they want to make it as fun and easy as possible. Notice in that whole spiel, There is nothing said about fees and minimal deposits. They'll hit you that when you start filling out the applications. But again, it's a good place if you got $1,000 or so, and you want to start dabbing in investments. It's not a bad place to start, but you got to know what you're getting into. All right. I happen to use E-Trade a little bit. I used to use a lot more, but I use Charles Schwab a little bit more. And we'll take a look at that activity and how that all works on Wednesday. Okay. We'll take a look at some accounts that I have. I got to figure out how I'm going to do that without giving away my secrets or personal information, but I'll figure that all out. So we're going to take a look at that. But as you can see, online trading is very slick. And mutual funds are the key to get into online trading because it's something that we kind of relate to, and then we don't have to worry about it too much. We have professional managers, we have people in charge of it, and I don't have to get up every morning at 5:30 and decide go to turn on CNBC like I do in this class early before a lot of you guys get online and decide what am I going to do with my money today. You pay people to do that, and that's one of the advantages or disadvantages of a mutual fund. So we're going to take a look at ways of defining mutual funds a little bit more on Wednesday. But I think one of the things is if you have a mutual fund, you are beginning the process of determining your future about return, your future of what you're going to do with this money, hopefully as it grows over time. But the thing to remember all the time is that there's a price to pay. There's a price to pay for that investment. A lot of people always think when they start investing money, they're going to start making money because they watch these screwball commercials and these ad campaigns and all the history of I want to be a Warren Buffett. It takes a lot of research, it takes a lot of patience, and it takes a lot of failures to be a successful investor. Trust me, it takes a lot of failures. Knowing what you trust and do not trust, and knowing the market and knowing where the world is headed. So these were other things we'll talk about over the next few weeks is about how do you develop that confidence of finally making a decision that, geez, you've worked so hard to get your money and now you're going to put it in. It's like going to Vegas. I can't wait to go to Vegas and gamble. And you take $500 and that $500 goes in the first hour you're there. Uh-oh, now what do I do? It takes planning. It takes understanding the risk. And that's one of the most important things about being a good investor. You're going to fail, just like anything else. You're not always going to make money. You're not always going to be successful. But understanding how you learn from failure and what you do about it is just as important in investing as it is in life. And so that's some of the topics we're going to talk about going ahead into the future. Now, I want to take a look at change pace a little bit now that we have everybody on who's going to be on today. Is I posted the exam number 2 grades over the weekend, and again the performance was very good. And naturally, in this setting, performances should be very well when you have umpteen days to work on it and probably different sources of getting the answers, but we'll leave that alone for now, is that the performance was very good. But I just want to go over a couple areas that were consistently missed by most of our students, just to go over that just for future reference. So let me bring up our midterm results solutions here, which are posted in Blackboard. Talk a little bit about that. And I'll get back to mutual funds, so don't worry about that. So here's our solutions. And again, everybody did very well. I was impressed that you all knew who Louis Farah was, our distinguished and unknown leader of the University of Laverne, who never shows himself anywhere that I have ever seen. I think I've been associated with Laverne for 30 years, and of those 15 years, he's been the chairman of board, and I've seen him once in 15 years. And you guys know that I get around, and I've never seen this dude. Who is he? What's he do? But besides that, that's good that you guys know this person, Mr. Farah, and you got some extra credit points for that, so good job. So naturally, a lot of our grades in this were over 100 for a lot of people. This is good because in the next 3 weeks, as I just said, we have 2 quizzes, a paper, and a final. And those additional points of extra credit may be of some help down the road. The first question that a lot of people have difficulty on, and most of you answered it well, but I was looking for the determination of Mr. Clarkson is 70 years old and wants to diversify his investment portfolio. He must decide if he should invest in a tax-free municipal bond or a corporate bond. The tax-free bonds are at a higher rate, are highly rated and pay 4.5%. The corporate bonds are more speculative, meaning they're more risky, and pay 6.5%. If Cliff Clarkson is in a 25% tax bracket, what is the taxable equivalent yield for the municipal bond? Now, I let you guys get away with this one. I was looking for the yield being 6%, the actual calculation. Now, naturally, I let that go for a lot of you. As long as you said that Cliff's municipal bond is tax-free, he's going to be returning more yield. Instead of getting 4.5%, which is what the bond is paying, because he does not have to pay tax on that 4.5%, he's actually making a return of 6% on that municipal bond. The nature of it being tax-free, being a municipal bond. So many of you did say it was tax-free, but watch out make sure you read the question carefully. What is the taxable equivalent yield on the bond? And I was looking for 6%. I could have made life very miserable for some of you, but I let that go a little bit as long as you mentioned that it was tax exempt. So what would be a better investment for Mr. Cliff? Would be the investment in the municipal bond, because the corporate bonds are a little risky, and yes, you are getting paid 6.5%. So most municipal bonds are less risky, and you're earning 6% tax-free. So, if you're looking for total return, yes, the corporate bond is the way to go in some respects, but it's risky, it's speculative, and at the same time, you're not getting any tax benefit with less risk in the municipal bond. So I was looking for something along those lines. One of the things you have to be careful, and I'm saying this very honestly to all of you have a very high grade average coming into these last few weeks. The final examination is going to be an examination that's going to be written for you being able to do it from home. Because of that, I'm going to be looking for complete answers. If you had this question number 1 on the final, many of you who maybe got 1 point off or no point off, and you answered it without giving me the yield, would get 8 points off on the final, because you didn't answer the question. So be careful down the road and make sure you read each question carefully. Now, I know a lot of you can say, well, that's all right, I got a high average, I can afford to blow the final. Well, that's true, but the final is worth 25%, and at the same time, it is only on the last third of the course, but it also incorporates some questions that incorporate our themes throughout the entire course. The theme of personal financial management, the theme of always being able to understand where you stand in your own personal finances, your risk, your return, your income, your debt, all those overall questions throughout the course. So just be sure going forward, you read each question carefully. If you selected a paper topic, are you thoroughly researching and thoroughly explaining the nature of your paper? I will be looking at that hard and fast over the next couple weeks in our review. So make sure you do that down the road. I gave you all some slack in a question like that one on exam 2. The only other issue that I wanted to discuss, and let me find it here. Investment goals. Okay, this is your interpretation of investment goals, and I know for a lot of you, you don't have much money, you're just starting out in the world, you don't have too many investment goals. But one of the things to remember is not so much what you have now in your answers, is what you anticipate and what you think you're going to have in the future. Remember, investing is trying to look at your life down the road, right? What you want to do. Now, right now, you look at your life down the road. Even I look at my life down the road. You don't know what the hell's going on because of the nature of the pandemic, because of the nature of way things are these days, with employment, with what companies are going to be doing in the future. Yes, there's a lot of unknowns, but part of investing is to cover the risk of unknowns, to make sure you plan ahead for certain changes in your life, both positive and negative. Negative has to do with insurance. That's investment planning. Insurance is the negative side of life: injury, illness, death, covering your assets, covering your ownership of assets. That's insurance. An investment is covering the positive side, technically, of the future of your life. What do I want to have down the road? Do I want to have a home? Do I want to live in another part of the world or the country of our country? Do you want to have choices in your life? Investment gives you the opportunity of choices. I'm going to sound corny, but just like going to college and getting a degree, with a college degree, you get more choices. You get more choices in your life. You have other opportunities you can pursue because of having that college degree. All right. One of the best things about that, even though you don't know what those better things are going to be down the road, you will have the ability for those choices because of having a college degree. And the same thing with investing. It gives you choices down the road in your life. All right. You don't have to depend on a paycheck every week if down the road in your life, if you start making a little bit of money on investing. You don't have to worry about changing jobs or changing careers because you got some money on the side to protect you and act as a safeguard. You don't have to worry about having a family and paying for the costs of having a family, children in college education, providing for your family if you have a nice investment plan. You don't have to worry about retirement, and you don't have to worry about people that you care for do not have what it takes after you're gone. So I know this is kind of morbid, but at the same time, this is what investing's about, to prepare for all these different things throughout your life. And that's something you got to understand. Even though your timeline is not, you have no idea today what your timeline is, and because you don't have much money, but just starting to think about that and where you want to be and what you want to do is an important thing. So it's not only the money involved, it's the thinking, it's the discipline. It's knowing someday I'm going to need some insurance for my life, for my family. For someday I'm going to need some money that I want to do things with in my life. And that's what this purpose is of personal financial management, is not only you don't have to have a lot of money, just have a plan, have an idea of a plan, have an idea of getting somewhere in your life that's successful. And so that's the most important thing that I think is an investment goal. Not so much, well, I want to make $1 million by the time I'm 30, is that you have some idea of what you want, where you want to get to. And then you have the discipline through your studies, through your education, through your work, through your management of your life to achieve those goals. And that's an important investment goal. So those are the two areas that I think come out of this examination number 2 that I want you to remember going forward. Read each question carefully, be specific, and also sometimes the questions are not all about money, they're about planning, they're about discipline, they're about get your life together in a normal way to plan for the future. And I think that's important. All right. Can you imagine a year ago right now? A year ago right now, we had a lot of people in our class getting ready for the SCIAC tournament, baseball tournament. We had a lot of people getting excited about the summer and going into their jobs or studying more. They had a lot of people in this class getting excited about, oh, it's summertime, I get to relax and be with my friends and my family. And now today, a lot of us aren't thinking that way, are we? The world has changed. And that's why when you have planning, you have goals, that as things change in your life, you're better prepared for them. Geez, who would have thought now I might, not to get a downer, guys, I'm sorry, that I'll never play baseball again in an organized team. That's a bummer. Or who would have thought now that I'm not going to have to be able to share one of the best moments of my life, commencement, without my family and without having the reward of seeing all my friends and my professors and my family together to celebrate graduation. Who would have thought that? But you know what? That's a bad thing. That's a downer. All these things. But we move forward. You move forward. You move forward and think about where the next step is. Where is the next commencement in your life? God, does that sound corny? I sound like Devorah Lieberman there. I apologize. But where is the next steps in your life that you're going to be able to share with your family and share with yourself, meeting goals, meeting things that you want to do? So I think of anything that we're going to talk about a lot in these last 3 weeks is how we use this course and use education and use the relationships that we've developed the last 4 or 5 years and move forward in our life and use that as learning tools, but at the same time, where we want to get to and how we want to be successful. And that's an important part. And so we'll talk about that, and anything that any of you can add to that discussion, please feel to do so. And I know nowadays it's very frustrating because you have no idea what's going to happen next week, let alone next September or October. And that can be an unsettling thing, and I understand that. So think about that. We're here to talk about that. I'm here to help you with that, and we'll move forward on that. All right, good God, I sound like a psychiatrist. I gotta shut up. All right. It's the usual group with their cameras today. Good seeing you. Devin, you're always on early. That's going to earn brownie points when it comes to class participation, I'll tell you. And Aaron's hair is looking like mine today. Good God, I got to start wearing baseball caps. My hair looks entirely like a dork. So I apologize, guys. One last thing before I let you go this Monday. Let me bring this up. Some of you came on a little bit later. Just remember, we have a quiz on Wednesday on chapters 12 and 13. We'll have a quiz next week on May 13th on our portfolio and our spending diary. Then we have the writing assignment due May 20th. If any of you need help with research or where you want to go on that paper, please let me know. And we have a final examination distributed in 2 weeks on May 20th, which will cover the last third of the course, plus some overall questions about what we've done in this class, and that is due Sunday, May 23rd. And remember, everybody, there are no extensions for any of this work. No extensions. You have to post your paper on the 20th. You have to post your exam on the 23rd. No extensions for these last few weeks, so please, everybody, be aware of that, all right? And the big date or the ending date of this course will be Tuesday, May 26th, which is the day I post all the final grades and you know what you received in this course. And that will be the day that I will post all the grades if you have completed your course evaluations, and that if you do not complete the course evaluations, you still get a grade, and your grade won't change. You just won't be able to see it in Blackboard. You'll have to wait a couple of weeks. We have our first chat question of the day, and I wonder who this might be from. I was right. Can I send you my paper to get your feedback, says Mr. Julio. Julio, you sure can send me your paper to get my feedback. I am not going to talk to you too much on the format of the paper. I might, if it's a total disaster, I will, but I'm not going to type a comment on that. I will comment on the nature of your work and whether I'm satisfied with your covering the topic appropriately. So yes, if you do want to send me a draft of your paper, please feel to do so. If you do send me a draft, make sure in the subject line of the email, it says Business 345 paper draft. I'm going to get hundreds of emails over the next month, and I might lose things. So please put in a proper subject matter so it doesn't get lost in the vast array of emails that I do receive. So Julio, yes, you can send me your paper, and please do. I'll be happy to help you with making sure you're in the right direction on that. No problem. Okay, thank you. Okay, good. Another chat. Ivan, are the spending diary and the portfolio going to be due along with the final? No, they will not. That's why I'm having a separate quiz just for that, Ivan. Now, we're going to have a separate quiz next Wednesday, May 13th, where I'm going to ask you to price out your portfolio as of Friday, May 15th. I want to do that early so I can determine who the Wolf of Wall Street is in this class. So you're going to have a portfolio question on a quiz question next week to do some work on your portfolio as of Friday, May 15th. The spending diary will conclude also on that Friday or Saturday, the 15th and 16th, and I'm going to ask you for some reflection on what your spending diary has done. I've changed this from prior classes, Ivan, because I assume because of the pandemic, your spending has been altered by that pandemic, has been altered because we haven't been able to do too much. You're just sitting at home. So some of your spending patterns have probably been dramatically changed. So that's why I'm going to separate this out from the final and have a special quiz for that, quiz number 4, to add to that stock portfolio question, a couple of questions on reflecting on your spending diary. Some of it will be kind of touchy-feely, but some of it will be a good reflection on what we have learned from the spending diary over the course of the class. So that's how we're going to handle that. All right. So there'll be no portfolio or spending diary questions on the final of May 20th. Okay, good. Good question. All right. So on Wednesday, we're going to take a look at a little bit of online trading. Now, some of you might be experts on that. You'll probably say, just roll your eyes, and what the heck is he wasting my time showing me this? But at the same time, it might be opening your eyes about a little bit about this new stuff and that you've been thinking about it or understanding how it works. We'll take a look at online trading on Wednesday. Also, we'll take a look at these problems at the end of chapter 13. We're probably not going to look at all of them, but some designated ones, and the ones that I designate will probably be what you see on the examination in a couple weeks. Problems 2, 4, 6, 8, and 10 from pages 450 and 451 of the text. So that's where we stand. Moving forward, I would think this week you might start beginning to work on your paper a little bit. Beginning to hash that out. And as I said at the beginning of the class, we have graded work every week now from here on out through the end of our course. All right, guys, let me get back here. Let me make sure I got everybody who came on today. Mr. Palm is here, good. And Danny is here, that's good. All right, we're all set. Thanks, everybody. We'll see you all on Wednesday. I will do something about my hair, maybe a hair wig, maybe a toupee or something. Adios, we'll see y'all.
That would be interesting to see.
Thank you, Chris.
Take care.
You too. Devin, you look like you're in jail. What's going on there? Smile.
I was just trying to figure out how the length of the paper, how long it had to be.
It's 3 to 5 pages.
Okay, just making sure. Thank you.
All right, Devin. See you later. Palm, take care, buddy.